Thank you, everyone, for being here and joining the Houston Community College Procurement Small Business Development Empowered CEO Systems to Manage Profitability and Financials, Part 2, hosted by Veronica Douglas. I am Julie Irvin Hartman, co-founder of B2G Victory, and also joining me will be Susan Repka, co-founder of B2G Victory. And this is the second part of a two-part series, and we'd love to thank Houston Community College for being the host and putting on this program, as well as all of the other things that they do for Houston small business. I'm going to turn it over to Veronica.
All right. Thank you so much, Julie. And welcome back to part 2. If you missed part 1, you could probably catch it sometime in the future, as I'm sure we will do it again. Today, we are going to speak again with Susan and Julie. They are also presenters for our IMPP program. They have supported the Small Business Development Program at HCC for many years, and they will continue to do so. If you learn anything from them, please let them know. Please let us know. If you're interested in utilizing their services, please know that you are free to do that. Reach out to them on your own and contact them for any of your needs. So without further ado, we'll go ahead and get started, and I will introduce today's presenters to you. First up is Susan Repka. Susan has 2 decades of experience working with small and women-owned businesses. She assists small businesses with certification, capability statements, and responding to government RFPs. Susan started working with small businesses in 1998 after joining the Women's Business Enterprise Alliance. She served as certification manager, where she led the certification process of all women business enterprises, and as executive director from 2007 to 2012. During her tenure as executive director, the Houston Galveston Women's Business Center was opened and following the Small Business Administration's funding approval. In 2010, Susan was named one of Houston's most influential women by the Houston Woman magazine, one of the top 25 women of Houston by rollingout.com, and was nominated for Sterling Bank Inspiring Texas Women's Award. In 2016, Susan received a Legacy Award for her work with women-owned businesses in the Houston community. She is alumnus of Leadership Houston Class 21. Now, Julie Irvin. Julie Irvin Hartman, MBA, is a certified proposal manager, consultant, and presenter. Ms. Hartman has 25 plus years of government procurement experience and a win rate of 87%, resulting in $5 billion in contracts for her clients. She has led proposals and presentations for multi-dollar companies across diverse industries. She has a proven ability to execute and manage projects with multiple stakeholders on schedule and within budget. In 2017, Julie sold her marketing agency, got married, and moved to Tomball. She spends time with her husband, 3 bonus sons, and their trampoline jumping Old English sheepdog. Ms. Hartman has a BS and a BFA from Sam Houston State University and her EMBA from Texas A&M. Welcome back, ladies. I'm excited to see part 2.
Thanks, Veronica, and thank you for everything that you do, not only for us, by letting us be a partner with HCC, but like I said, for all of Houston's small businesses. And this is part 2. We talked about part 1 on June 15th, and that is actually posted on our YouTube channel. So part 2, today's session, will also be posted on our YouTube channel by the end of next week. So you've got both of those that'll be available to you from this. Today's session, we're going to explore some reports, and we're going to talk about, most importantly, how do you make informed decisions based on your numbers. We're not going to, very similar to part 1, we're not going to go over how to set up your chart of accounts or data entry or go line by different financial statements, because every business is a little bit different. We're going to show you a couple different businesses so you can see how that relates to you and your business. And our ultimate goal, as well as Veronica's, is to take away some things from this session to make your business more profitable and more efficient. And we really want you to engage with us. Drop your questions in the question and answer, and then in the chat, we're going to be putting the links for different websites or other things. We'd love for you to put your contact information in the chat right now. And Susan and I are going to be toggling back and forth like we typically do. So we want you to really keep engaged. Like I said, the recording of today's is going to be available on our YouTube channel, and Susan's going to drop in the chat for the part 1. And while you're there on our YouTube channel, please subscribe, because we do other seminars and post other videos there on our channel. So we want you to subscribe and then be notified. And thank you, Veronica, very much for the resounding endorsement of B2G Victory. And we've launched a podcast while you're on our website. We hope that you subscribe to that as well. We've interviewed a surety bonding company, a banker, we interviewed Port Houston, Susan and I, about our passion for doing meaningful work is there as well. Today, you're going to hear from the 2 co-founders, Susan and myself, but there's a huge team here at B2G Victory to support you if you choose to have us support you in your government contracting pursuit. So we're going to put all of our contact information in the chat for you to continue the conversation on any of your social media channels. Support us there. We're super excited. On LinkedIn, we have officially hit over 1,500 for B2G Victory. And on Twitter, we're hovering around 400. And our goal for YouTube is to get us to 500. So we want to help you hit your goals. And we're a firm believer of, if you put your goals out there, there are people that truly want to help you as well. So we wanted to let you know our goals. If you want to book a consultation with us, there's the booking link as well. So a whole team. And we want you to walk away with actions from today. And as we go through the information, think about, maybe, is that something that can be achieved next week? Is that something that needs to get pushed to next quarter? Or is that something that needs to go all the way to the end of the year? And maybe this is something that you could do quickly this week, is sign up for our Victory portal. There's a couple different memberships. There's a free one. You can save 50% off of your first year. But as you go through RFPs, if you want to look up words on our glossary, look up other frequently asked questions, there's templates there. There's tons of videos. There's an amazing search feature that if you wanted to put in, how do I set up my firm profile? There's going to be stuff there. What are the most frequently mistakes on a capability statement? That's there as well. We're going to do our first flip, and Susan is going to come and take the first section of our content for today.
All right, thank you, everyone. I just dropped our contact information in the chat. We would love to know a little bit about you. So if you'll drop your contact information in the chat, I'd appreciate it. So in our last session, we went over some software comparison, dashboard insights, financial statements, job and project profitability. We're going to take some deeper dive into some of the reports. We're going to use the word QuickBooks a lot, so please just forgive us. You can use whatever software that is best fit for your company. So we're going to go over my absolute favorite thing, and I am a little strange, and that's budgeting. So I do like to work with the budget and kind of put together a budget. Accounts receivable analysis and your client analysis. So these are some really great ways for you to kind of determine where you're at and where you want to grow. So why do you need financial statements? So your banker might need them if you're going after a loan and line of credit. Maybe you need some new equipment, maybe you've gotten a government contract and now you're like, oh, well, I need this line of credit because it's going to take a while before I'm going to get my first payment. The owners need to be looking at their financial statements in order to make informed decisions, maximize the company's profitability. And, well, how much cash do you have? Are you able to continue running the company if one of those crusty accounts receivable doesn't pay? What are you going to do? Do you have enough cash to cover that? So that's kind of why we're looking at your accounts receivable as well as your clients. So it's an interesting kind of information is that if you only are looking at your financial statements once a year, you look at them after your CPA hands them to you as you're getting ready for your accounts to file your taxes, you only have a 25 to 35% chance of being successful. Everything you are looking at has already happened. It's like looking at your rearview mirror as you are driving forward. Probably not the best way to handle that, right? So if you look at the monthly, it's like at the end of the month when we're closing out, I'm looking at them then. Still in the rearview mirror, but not quite as far back. So you have a 75 to 80% chance of being successful. Better. But if you're looking at them weekly, then it's a 95% chance of being successful. So you're also looking through the windshield of where you're going, those trends, any changes you need to make. It's like we were expecting this one product service to do really well. It's not trending out. How can we shift? What do we need to do so that you are meeting that budget? So you need your financial statements at any given time. Whether you're going after a loan, you're doing a refi mortgage, on your building, on your home, they're going to want to see your business financials as well. You're getting ready to update your certifications. It's time to renew those certifications that come due every year. You have to submit your financials with those. When you either are submitting a bid or after you have won a contract, depending on the entity. Some of them want them in your bid and some of them want your financials when you receive a contract. A prime may ask for them if they're looking to subcontract with you. They want to make sure that you are able to do the work, that you have the financial resources. There are lots of different grants out there for small businesses now, and often they want to see your financials as well. So you need to be able to put your hands on your financials immediately. So again, we're going to use the word QuickBooks a lot. It's just easier, but we also know that there are many different softwares out there. Quicken, SageOne, FreshBooks, Zoho, Peachtree, or if you're in the startup phase, you may be relying on that Excel file. Whatever is working for you, then, understand that's what you need to be doing. But again, we're going to be using QuickBooks because that's what we're familiar with as well. All right. Do we have any questions as Julie and I flip? Any questions, Julie? And
No, we don't have any.
Okay.
Righty. Also, if you want to put in the chat or in the questions, maybe one or two things specific that you wanted to make sure that you take away from today, please go ahead and put those in there as well. We want to talk about common size financials. And in the previous session, we talked about financials, right? So there's three reports that make up your financials: your balance sheet, your statement of cash flow, and your P&L or your income statement. And we're going to take and focus on the P&L here for example, purposes. And what we're going to talk about is doing an analysis. And there are two analyses that I recommend you doing with your P&L as well as your balance sheet and your statement of cash flow. And that's a horizontal analysis as well as a vertical analysis. So what does that mean? So a horizontal analysis, so think about going horizontally across your profit and loss statement. And so what we're doing when we're doing a horizontal analysis is we're comparing the financial condition across times. And so, for example, we're comparing either month over month or quarter over quarter or year over year. And with the horizontal analysis, we're looking for trends, right? And what's great too with the horizontal analysis is when we do that, we can also go and look and see what trends are happening in our industry or trends that are happening here locally in Houston. And so these ratios and performance indicators can help you kind of pulse things, right? Just like Susan said, when you're doing these analysis and you're looking at your financials monthly, then you're in the driver's seat versus, you know, looking and doing these analysis historically. Well, then you're just reading a history book. A vertical analysis is where we're going to take a financial condition and performance to a base amount, right? So in the example that we're going to walk through here, we're going to look at everything as a percentage of income and talk about how when we're looking at a percentage of changes of income and what something is, it's going to really make you think and take a little bit of a deeper dive, in addition to looking at the comparison in terms of a percentage versus just as looking as a comparison in terms of dollars. And so the first thing we're going to jump into when we're talking about our common size financials is our vertical analysis. And like I said, we're going to do that in terms of percentage of income. All righty, so where do you even go for that? And what's great with QuickBooks is there's, Susan's going to drop this link in the chat, is if you want to test out some things, you can do that with a test company. You don't have to worry about, you know, tweaking your chart of accounts or that. So here is two different links for test companies. And this is on the online version, these screenshots. So here it is with this test company. And so to start with your vertical analysis, I'm clicking right here at profit and loss as a percentage of income. So QuickBooks already is doing that for me. So I don't have to worry about doing that math. So here's the report. If you weren't familiar with it and going and generating the report as a percentage of income, if you're used to just going to the P&L report, you can do that. Here's Craig's Design and Landscaping. He's going to be our sample company. And here, when you go to compare another period, right there, you can drop that down. And there's some other options there. And you can, right there, it says percentage of income, because that is one of the most common ways that people do a vertical analysis, is comparing it to income. So sure enough, I do it right there. It says, here's my current period, right? Or sorry, it starts with the first one, January through March, which is the first quarter. Then it's going to the second quarter, April to June. And then I can see right there where it's taking the income and comparing it as a percentage of income, right? So then I can see that in Q1, my landscaping design was 30% of my income in Q1. But landscaping design, the revenue increased in Q2, but the percentage of income was 12%. So landscaping services was only 30% of our income in Q1, but it was 13% in Q2. So now I'm going to take a deeper look and go, wow, job materials. All right, so we were making and invoicing a lot more money on materials in Q1 and in Q2 than we did in Q1. Well, then that's going to tell me that I need to make sure to go to my cost of goods to make sure that those costs were incorporated into those invoices. So when you're doing your vertical analysis, you can look and see the current quarter, the percentage of income, the previous quarter or previous year, right? So you can look at this in terms of months, quarters, or years, and then it does total, right? So now on my whole year to date, because we know things go up and down, I can now see in that final column how my income is coming in, right? From either landscape services, from pest control services, or sales and product and income, and I can adjust accordingly. And with QuickBooks or in all of the accounting software, you're able to export it to Excel or PDF, or you can add it to the management report and it will save all of your settings. So it will say, save the settings that if this is a report period for year to date, my columns are by quarters, and then I'm doing a comparison to percentage of income, and then depending on my accounting method, cash or accrual. And then you, like I said, you can save it, or if you make changes, you can just rerun the report, or you can export it to Excel. So here's the report compressed, right? And anytime in QuickBooks you see those arrows, that means you can expand or contract. So now I can see that there weren't very many expenses happening in Q1, but there were quite a few expenses in Q2. But in that other column, the percentage of income. So for every $100 that comes in, if you think about it that way, right? Because income, the 100% of income is 100%. And if we think about it in terms of $100 came in, well, of that $100, 48 of that went out, right? Which left me 46. And from that 46, then other things came out, miscellaneous. And then at the end of the day, so I sent invoices, right? And I got $100. At the end of the day, I ended up with $15 in my pocket, right? So that's kind of a simple way thinking about when you're looking at your vertical analysis and percentage of income. And then when you're talking to your banker and you're going for a loan, maybe that's a line of credit or an operational loan. Now you know that your cost of goods are 94%, your net operating income is 46%, and your net income is 15%, right? And so that's for Q2, but then you've got your overall total. So we had a rough, maybe a rough Q1, but look, Q2, things are definitely turning up, and our diversification in our income has definitely increased, right? So back to looking at this as a percentage of income in your vertical analysis. In Q1, I was only offering 2 services, landscape and pest control. And even though I didn't generate a whole lot of money in landscape services in Q1, I was very heavy landscape. Well, now when I go to Q2, look at all of the other ways that I have diversified and the balance of those services as a percentage of income. So I can see, A, where am I going and where do I want to go? And which one of those income generating services is generating me the most profit? And here's what the whole report looks like exported as a PDF. And so you can see both of those pages and all of the level of detail that you can get. And the great thing about looking at this report in QuickBooks is if you have a question about, you know, the expenses that happened for equipment rental in Q2, you can just double click and it will take you exactly to that entry. Are there any questions on the vertical analysis?
None in our Q&A.
All right, go ahead and put in the chat if any of you use a vertical analysis when you're looking at your monthly reports or maybe your quarterly reports. And if you don't, then that might be an action item that you do at the end of maybe this quarter or at the end of next quarter, right? And you can do these vertical analyses at any time. You can do a monthly or do the trend. All righty, the next common size financial analysis that we're going to talk about is a horizontal analysis. And that is going, you know, line by line or row by row across your financials. But when you're doing a horizontal analysis, it's really important that you have at least 2 periods, right? And so a horizontal analysis to me is really important both vertical and horizontal, but when you're working on your budget. And that's why we put this section before Susan's coming with her favorite thing in the whole wide world to do, which is budget. So with the horizontal analysis, I can look at trends, right? And then I can be proactive and look and identify anomalies. So here's an example of a P&L and doing the horizontal analysis. So we're going over each line item in your income, your cost of goods, as well as your expenses to do this horizontal analysis, right? And so what we're doing is we're looking at the trend from year over year on each item in our chart of accounts. And so you've got 19, 20, 21. So you can see that the change from 20 to 21, 22, and then year to date 2023. And so you're not going to have one for 19 because you can't compare a year to a year. So what does that formula look like? And you can simplify this Excel formula if you want, or you can use this one. So the if error, and what that function does is that removes the divide by zero, right? Because sometimes it can be really annoying when you're trying to do analysis, and you can see divide by zero because there's a zero. So if an error, what this does is it just leaves the cell blank. So you're going to compare the previous year to the current and then divide by the absolute value of the current year. This is a preference that I like to do in terms of absolute value. So that's the ABS. If that's not important to you, then you will have you won't have absolute values. So here you go. And if you need any help with this or questions, we'd be more than happy to help you with that. And then this is just going through the expense items in this P&L with the horizontal analysis. And you can see that in contract labor and depreciation expense, if we wouldn't have had that function, we would have gotten a divide by zero error because in 21, there were no expenses. So that's another reason why I like to use that. But once again, it's just a personal preference. And then you go all the way down. So just like your vertical analysis, your horizontal analysis goes all the way down your chart of accounts, all the way from net ordinary income to net income. And this is great because now I can see and identify where my company is going and the different things and how things are adjusting to the market. Maybe there are some products and services that you used to offer that now that you're going to be looking at your horizontal trends and your vertical trends, you may not offer anymore. Or if there's a new product or service like we did, the portal, we need to really keep a pulse on that and see how we need to continue to modify that. Or if there's expenses. So for example, this company in 2019, there were, computer expenses each year. Well, there was, quite an increase of 31% for computers in 2021. And so how are things moving and pulsing with the various chart of accounts as you go through your horizontal analysis and your vertical analysis? And note, bankers, when you send your financials over to them, they're going to do this exact thing. So go ahead, and if you're in a growth mode in your company or you're going after a line of credit just to help your company be resilient, make sure that you do this on your reports and are prepared for those conversations with your funding source, whether it's a banker, whether it's an investor, or maybe someone within your family that is helping you fund your business. So now the moment we've all been waiting for, and I know she's been actively waiting for that, is budgets.
All right, so we are going to talk about budgets. So there are a couple of different types of people sort of in the budget world. But we have those that don't do a budget. They just wing it and hope for the best. Those that go in and say, you know what, for all of my income, I'm just going to pick a percentage that I'm going to increase, we'll say 20%. And all of my expenses, I'm just going to increase them by 15%. and there's my budget. Yeah, there's a different way to do it. There's the people who are like me, who like to do a whole analysis and a whole planning and a whole strategic plan with the budget. So I'm going to show you what that looks like in my world. And I did come from the nonprofit world, so this is how a budget is developed in that world, because you can't make budget changes like you can with your own company. So budgeting is a verb. It's action. It's constant action. For your company, you can make budget adjustments throughout the year. You can look at different things, but you're going to start with sort of your estimated revenue, your fixed cost, one-off costs, variable costs, and you start building a foundation. Again, it can be changed, but you're looking at the future of where your company is going to be at the end of the next year. So it's not always easy to do, but the more you do it, the better you will get at making sure your budget is going to, at the end of the year, and you're going to be on budget. Your banker needs this. They want to know where you're going, not just where you've been. All right, so kind of need to know what your burn rate is. Get your net burn rate, your cash sales minus your expenses. So kind of review a couple of months. What are my expenses? Those expenses, well, I need to make sure that I have at least that much in cash coming in to cover those expenses. And you may not make that every month, but you need to know what it is. So maybe when you're having your sales team and you're having your staff meetings, and you know what, this is the number we have to get by the end of the month to cover all of our expenses. So if you have that number in your head at all times, it's going to help you throughout the year, and it's going to help you with your budget. So again, this is Susan's world in preparing a budget. So you're going to start by defining major objectives for the company for the next year. You're going to gather all of this data, and you're going to start preparing a draft budget. You're going to review that, and then each month you'll do monthly reports to see how close to budget you are, what you need to tweak, and you revise it as needed. And again, the longer you do this, the closer you will be to having a budget that you're not going to have to do a lot of revisions. You know where you're going to be. So let's start with number one. Let's define our major objectives. So maybe that's the time you do your staff reviews, because if you're going to be inputting some money for some raises, you kind of need to know where everyone is. You also need to know what, maybe they need some professional development. They're going to be asking for that. So you need to incorporate that cost. Look at all of your current equipment. Is it enough to get the job done of where you want to be at the end of the year, the next year? Do you need to replace, purchase, maybe do some maintenance? Are you adding new products, new services that you need to stop and think of what they're going to bring in? When are they going to launch? If you're planning on launching it in the middle of the year, then you need to make sure that you have that into the budget. Are you entering into some new markets? Do you need to update your office lease? Are you maybe looking to purchase a new building? We're just going to move into our own space. This is a great time to have IT come in and look at all of your computers. And maybe they've been doing some, remote updates to your computers to keep them running. But this is a really good time to have them actually pick up the laptop, make sure that it's doesn't need to be replaced. Make sure it's not at the end of life. look at that IT inventory to see when did you purchase your server? When did you purchase these laptops? And sort of budget in those expenses. You should know when you bought it, and you should know how long it usually will last. That's a lot of information. That's a lot of information you're gathering. So we kind of need to know where you're going to be, and then start figuring out how much all of those wishes are going to cost you. If you're launching a new product or service, what's your marketing plan? If you need to replace that equipment or have it maintain, do some maintenance on it, what does that cost? What's your insurance cost? We know the health insurance is going to go up every year. Your general liability may be going up. Your just all the, maybe you have to now have cyber liability because you've gotten a contract and they're going to be asking for that, and that contract starts at next year. Lease updates, whether that's the building lease or the copier lease. Your sales team put together some sales projections. Look at all of your current expenses, make sure that you are including all of those in next year's budget. And if you're doing that, deep dive into trends across horizontally, then how, what percentage that those expenses go up each year. Look at your current customers. Is there any way you can upsell some of that? Are there any of your customers that once you done your analysis of your accounts receivable, that maybe it's time to fire? All of that goes into this. Any new marketing that you're going to gather, all of that information. Know where you're going. Now, you prepare that draft budget. Now, the way I do it is I usually export everything out of QuickBooks into an Excel file so I can play with my numbers. I can add in all these new things before I actually get into QuickBooks. Julie likes to go straight into QuickBooks and start updating things. Different way of doing things. Both of them are correct. You can do them either way. I just like to play a little bit more with mine, so I like to use the Excel. But get it into whatever mode works best for you so you can see where you are. All right, now let's take some time to really review it. Well, I like to start at the bottom. At the end of the year, am I making a profit based on my budget? Then I'm going to do analysis on everything else, but I want to make sure of that first. If not, I need to do some serious adjusting. So do these numbers make sense? Look at it each month. And again, you may know from trends that January, you're probably not going to make a profit because January's slow. But you also know that you do a lot of work in, say, September. And that usually is your biggest income month, and that carries you through slow months. But does this make sense? Do you need to cut back on some of your expenses? Evaluate your current pricing. So as Julie was looking at it, maybe your cost of goods has gotten so high, you need to increase your pricing because materials just cost more now than they did last year when you put your budget together. So make sure that your current pricing is covering all of those cost of goods and making a profit and helping pay the salary, all of that, right? All of it needs to make sense. Now, you're going to review your budget every month. You're going to run a report that compares your actuals to your budget. You're going to do this for the month. You're going to do this for the quarter, and you're going to do this year to date. So you can make sure that everything is making budget. Now, what happens if you've added a new employee in the middle of the year? That means that, you know, all of those payroll expenses now need to be adjusted. Or you know, your insurance comes back and they quoted you this one thing, but you've added a new vehicle, or you've added this new employee, what's going to increase your health insurance. Or, you know, the landlord comes back and says, you know, sorry, we're going to have to increase rent. And then, or, you know, that new revenue stream that you were planning on has now created a second revenue stream you weren't planning on, because that one was doing really well and you've been able to kind of capitalize on that. And so now you need to update and add that revenue stream. So it is okay to update your budget. You don't have to say, well, you know, it's just going to be over or under. Update it so that you are on track. That's going to, you know, help you get a little bit better at this. It's going to help you do next year's. It's also going to give you a clearer picture of where you are. All right, so one of the ways you can do this is like, oh, you know, my company is going to be $1 million company. Well, okay, so let's stop and think about this. I'm going to be $1 million company. Then I need to know what I need to make each month to ensure that I hit that $1 million. $83,333.38 or 33 cents every month. Okay. Now that means 20,000 every week, because we're going to base it on 50 weeks. Because you know what? Nobody makes anything the week of Christmas, or actually the week of Thanksgiving either. So we just know that. So we're just going to base it on our 50 weeks. So that means since I work on my company on Fridays, I work in the company Monday through Thursday. So I need to hit $5,000 every day, 4 days a week. Okay, so now how am I going to get there? So we're going to talk a little bit about that, but let's talk about your expenses. So do those fixed expenses first. And as a business owner, if you are not currently drawing a salary, make sure that for next year, you budget your salary in there. Look for any of those trends on your expenses. Know what those increases are. Read your lease for your rent. It's going to tell you what the increase is. Income, recurring revenue. Like if you're able to charge a client every month for something, make sure you're putting that in there. Think about your revenue streams and your revenue trends. And again, if you're going to hit that $1 million, what do you need to know? What services are going to help you meet $5,000 a day? What can you sell quickly? So, okay, I got my budget ready. I've got my Excel sheet. I know what's going to go in there. How do I put it into QuickBooks? So QuickBooks, go to planning and budgeting, set up your budget. Now it will pull last year's information. It's all going to be there. Well, now you know what your increases are. You know what additional items that you need to add in your revenue and your expenses. So you're going to add all of that in there as you go along. And it's going to help you calculate. Make sure it matches to that Excel sheet if that's the way you did it. Go through it line by line till you have everything. Now you can put totals in there and it automatically will spread it out through the month, or you can put it in month by month and it will update the total. You want to do month by month because we all know there are slow months There are months that we know we're gonna get more business. You've been doing this a while, you know where those revenue trends are and those expense trends. And so we pay our insurance quarterly, not monthly. We're going to put that in there, what months we know it's due. So my Excel spreadsheet has a column for comments. And I do that because I need to remember why I increased or decreased something. Now, I usually pull 3 to 4 years of data so that, as Julie said, we're watching those trends. Get other team members involved. Have them tell what their goals are, what they think their sales numbers should be. Get everybody involved, because you know what? All of you have to live with this budget. If everyone says they can meet these sales goals, then it's more likely that you can meet those sales goals. Like I said, performance evaluations, do some assumption reviews, make sure that these numbers are realistic. All right, you're running monthly reports. What is my budget versus actual? And if it's off by a little bit, don't get all upset. It's okay. But if it continuously is off, then maybe that expense increased and you need to adjust it. Or maybe that income is doing much better and it's 6 months in and it has beat each month. Well, let's increase our revenue for that one. So here it is, budget versus actual for first quarter of 2015. So anything that is over budget is in black as far as your income, and anything that is sort of under budget and expenses red. If you're under budget and income, it's going to be red. It's going to allow you to quickly get that visual of where you are. And if you're pulling it up in QuickBooks, which you should be, as the owner, you should be able to pull your reports. You can click on that and find out what makes up that number. Here's a more detailed. So, that was sort of the summary. Now we're going to look at all of our revenue streams. Everything that we sell has a revenue number attached to it. So you can see where you are on that particular item to kind of help you gauge if this item is being as successful as you had planned. If you put everything under sales, it's going to be really confusing and harder for you to see if you are successful in just one different item. All right, we're going to look at our cost of goods sold. Ooh, some numbers are off. Click on that, find out why. Is that sort of a one-off thing should write itself by next quarter? Or is that a continuous issue that we need to do some budget adjustments so that we are capturing that? And let's look at some other income, look at our total expenses. And again, when you're doing your budget, you may find that one month is just not, at the end of that month, you have budgeted for a loss because you know it's a loss, but the expectation is your next month should cover that, catch back up. So, okay, so we're not on budget. still profitable, but not on budget. Now, this is the time you're going to click on some of these numbers and find out why. And again, it may be just one thing that happened that you weren't expecting, and you will catch that in next year's budget, or it may be something that has increased time over time and you need to adjust. Whew, that is a lot of budgeting. All right, any questions? All right. Julie is going to come in and talk about knowing your numbers.
As you can see, we're sharing different tools and tips that we use and encourage other companies to use in order to be successful in running your business. And we know, it's hard, right? I mean, some days are 10-hour days, some days are 20-hour days, some days are, really long. And there's always the opportunity to stay on your numbers, right? And focusing on Fridays on your business, but then we live in our business the other days. And so I wanted to show you some tools and places where you can look on the QuickBooks mobile app while you're maybe waiting at the dentist office or waiting in line to pick up your kids from camp or whatever, that you're able to kind of keep a pulse on your business instead of being at your desk and in front of your computer. So here we go. We're going to just jump on in. And this is the My Business beta on the QuickBooks mobile. So we're using Craig's Landscape and Design Services as our sample company. And this is just right there in the QuickBooks app, right? And so I can see my net profit as well as my expenses. And what's great is you can click on each month and it'll tell you. And then what's also great is here, if you're looking at June, it's telling you that this is based on 69% of transactions categorized. So then that tells me that either I need to do it or my bookkeeper needs to do it or whoever is helping me get information in, because garbage in is garbage out. So if your transactions aren't accurately categorized, then your horizontal analysis is going to not be worth anything. Your vertical analysis isn't. And then when you go to budget, right, and you've got Susan right there on your shoulder, you're not going to be able to budget effectively and efficiently if things aren't categorized. So here in the mobile app, you're able to see that, which is great. And as you go through each month, as you categorize your transactions, whether, like I said, that's you or your bookkeeper or whomever, you'll be able to see that. And so then down below, it tells me what, with Craig's Design and Landscape Services, what his income is and what his expenses are. And it's doing that horizontal analysis quickly for you and automatically comparing it to that same exact period in May. So if I'm looking at June 1st to June 15 and comparing it to May 1st to May 15th, the income was down 25%. And then back to what Susan was talking about with your budget, right? So if I know what my monthly, burn rate is, or if I know what my monthly income goals are, or weekly, if my monthly income goals are $60,000 a month, so that means, divide that by 4. Well, we're about halfway through the month and I'm at, 34,000. Okay, well, I'm trending good to where I want it to be. Also, if you know your net burn, how much my monthly expenses are each month, and then I can pulse accordingly on that. So this is just that quick screen right there from QuickBooks Mobile that says My Business, and it's beta. It's down there at the bottom. So then, sorry, I got a little ahead of myself. We both get really excited when we're talking about numbers. So there's the income and expense right there. And you don't even have to scroll down on your phone. Both of those numbers are right there. All righty. Then the expenses, right? So now I'm looking at expenses still here in My Business beta on my QuickBooks Mobile. And this is for June, right? And once again, it's kind of telling you, hey, this is based on 93% of categorized transactions. So in June, I'm doing a much better job categorizing my expenses than I am my income at this point on this exact day when I was looking in QuickBooks on my phone. So once again, pulsing and not waiting until the end of the year, not waiting until the end of the quarter to look at things. So then we can drill down, and these color codes match that donut pie up at the chart. So this is a pretty labor intensive month, and you can see that payroll expenses were the largest expense, but expenses overall were down 28% from this time last month. So what is different in June that was different in May, right? So you can start asking yourself, and two of the questions that I always, when I'm looking at numbers, is, do I understand how this happened, right? Do I need to dig deeper? Because back to, people are gonna ask you questions. And I put in the chat also a bonding company. When you go to get bonding for a government project, you're gonna need to turn in your financials. So if you're able to answer the questions, like I know that there will be 3 pay periods in June if you do every other week. Well, then June's payroll will be higher. And if you do biweekly payroll, there will be 2 months out of the year that there will be 3 pay periods. June is one of them this year. And when you're doing your budget for next year, go and look. All right, so then my outside expenses. So then as I click in my QuickBooks mobile app, I went from my business to cash flow, the little button down there. This is your business barometer, right? And so it's telling me here that 20 days average day to get paid in June. So if I'm invoicing my clients net 30, then they're paying on time. If I'm invoicing my clients either net 10 or net 15, then I have an accounts receivable challenge on my hands, right? And then this little question mark there, if you don't know how QuickBooks calculated the number of days to get paid, and this is just the little call out there. So average days to get paid for each invoice is the number of days equals the pay date minus the sent date, right? So then the average is the sum of the number of days divided by the number of paid invoices, okay? Susan touched a little bit on your burn rate. So your average monthly cash burn rate. So this is QuickBooks doing it for you if you have QuickBooks Online, and it also is in the desktop version, but I'm showing you screen captures from the test company in the mobile version. So what is my average cash burn rate? And so this is based on the last 6 months. So QuickBooks is looking at your last 6 months and saying that it is taking $44,000 a month in expenses. So now I can look at that. I can go and revise my budget, right, that I have, and start looking at trends and starting to pulse things. Alrighty. Continuing down on our cash flow section in our QuickBooks Mobile, is your money in? So how much is upcoming? So this is cash flow projections, right? And then how much has been paid and how many of your overdue invoices are coming up? And then you can just move that meter across from upcoming to paid. So if I'm projecting cash flow, right, and I'm meeting with the bonding company, I can tell them that, you know, I have got $60,000 that is scheduled to be paid within the next 10 or 15 days, whatever that is, right? But they're also going to ask you, and the banker will as well, is what are you doing to go and get those open invoices? And so we all know that bookkeeping, you've got it in and an out. You've got an A and a B, or both sides. So this is money out. So how much money is going out? If you put your bills in QuickBooks under the vendor side, then how much is going out? And back to, you know, what Susan was talking about with your budget, you might want to have a conversation with your vendors and see how can we lower cost, right? Because every penny that you save in expense goes straight to net income. And just like if you increase revenue by $1, your net income doesn't always increase by $1. But when you decrease your expenses by $1, your net income increases. So take some time to have those conversations with your vendors to see if maybe if you paid earlier, are they willing to lower the price, or if you buy more or whatever, or maybe you've been a long-standing customer with your vendor. How do you adjust that? All right, so then there's the description of the money out. They're in QuickBooks for Craig's Design and Landscape. So these are upcoming bills that you've entered. Also, I like to pulse on this. If we just finished a really large job, I should be seeing that entered. So once again, creating systems of checks and balances for you not only to be the CEO of your company and looking at your profitability now, but forecasting for the future. Then right there in QuickBooks Online, QuickBooks Mobile, if you scroll down, is Contact Us. So if you have additional questions on the QuickBooks Mobile app or how they calculated things, so back to those two questions when you're looking at a number. A, I don't like it, right? And then you look at yourself and say, self, what are we going to do about that? Or B, I don't understand it. And if you don't understand and you're new to starting to look at your financials more frequently, QuickBooks right here to Contact Us is a way to ask, or you can ask your CPA, or you can ask, your business coach or SCORE or people at the SBA. So I encourage you, maybe one of your takeaways from this part of the session is if you have QuickBooks Mobile or any of your accounting software mobile, look to see if it's feeding you this type of information. And A, when you're looking at your numbers, what do you like? What do you don't like? And B, what do you understand and what don't you understand? So in that space, are there any questions on budgets, horizontal analysis, those screen captures that I showed?
We had one question, we answered it.
Okay.
Maybe you want to answer it live though. Someone asked what net 30 and net 15 were.
Oh, that's a great question. Net 30 and net 15, those are payment terms that when you send an invoice that you are expecting to get paid by the customer, right? And so you'll put that on your invoice. I also encourage you to put that on your contracts as well. So before you do the work for anybody, everybody understands the payment terms, right? So maybe you're going to ask for a deposit up front, and then the final invoice will be sent, and maybe that's due net 10, net 15, or net 30. And you can change those settings in different accounting softwares. Also, if you are in the government space, we see this a lot in RFPs, is a prompt payment discount for net 10. So what does that mean? That means the typical payment terms are net 30. If the customer pays you early within 10 days, what discount are you going to offer them on the total invoice amount? So City of Houston does this, a couple different school districts do this. And depending on knowing your profit margins on different services, then you're able to answer that question. Maybe you could do, a 0.5% discount on net 10, or maybe if you like, whole numbers, maybe do a 1% net 10. But before you offer that, make sure that you're able to take that off of the profitability of that project or that client or that service.
And are they paying with a check or a credit card?
Yeah, great point, Susan. And are they paying with a check or a credit card? Because in the state of Texas, you can't push those credit card transaction charges back to the customer. The business needs to absorb those costs, right? And so if you're going to do a prompt payment net 10 and somebody pays you via credit card and your credit card processing fee is 3%, now you've increased the cost of getting that money immediately to 4%, right? So you might want to open up Excel and do some math on that. And it may not work for every business. It may not work for every project. Alrighty, so leading into the net 10, net 15, net 30. So thank you for teeing us right up for this next section, is accounts receivable. And now we're going to focus a little bit on the operations side of your business. And we're all super busy. We're sending invoices, and we see this a lot with small businesses, but they're like, I'm busy. I got my team on projects. We won contracts. We're sending out invoices, but I don't have any money in the bank. Well, where's that gap? Where does that happen? It's in your accounts receivable, because that's money that needs to come in. So that gap is right there in your accounts receivable. And it is so critical in order for you to do cash flow projections. We look at our accounts receivable weekly. We encourage everyone to do that weekly. And you can even see that on your QuickBooks mobile app as well. So here's an example of an AR report, right? We're changing companies here, and this is Castle Rock Construction. So your accounts receivable report is divided on those net dates. So current, if something is due immediately, so that's upon receipt, is it currently due? And then here's these columns which are late. So if an invoice is 1 day late, then it's in the 1 to 30. If it's 31 days late, then it's in the 31 to 60, 61 to 90, and then greater than 90. And then the last column is your total accounts receivable, the total amount due to you by that customer, right? So these are all unpaid invoices. So this is work you've done that somebody needs to pay you, or maybe depending on the type of work you do, maybe it's a deposit, right? Okay, and this number right here, your total accounts receivable, pulls over to your balance sheet as an asset. So when you go to the bank for a line of credit, an operational loan, an equipment loan, or you're going for some bonding, they are considering your accounts receivable as an asset. And that's what they look at on your balance sheet, because they assume that you are going to collect the majority of this money. So now we look at this in terms of the quality of the clients, right? Because now I'm looking to see if you're over leveraged on a certain number of clients. And there are definitely some clients here that owe you more money than others, as well as some clients that have owed you more money for a longer period of time than others, right? So let's take a deeper dive at that $95,000, right? So here it is in QuickBooks in the report, and you can export this to Excel. And when you're looking at your accounts receivable, start from the right to the left, because this also tells me who am I going to be picking up the phone with first, second, third, and fourth, as well as sending emails. So if I go through Castle Rock's construction accounts receivable, I'm going to be calling up Brian Cook, and I'm also going to be calling up Mackey Nursery and Garden, right? Because they owe me the money the longest. So they have owed us money 90 days or greater than from when the invoice was due, okay? So longer duration are always harder to collect. A non-paying customer is not a very good client, right? And each of us on the call today do certain things. We've got a plumbing company on here. We've got a construction company. We're a consulting company. You're not a bank, right? None of us are bankers. We don't finance. And when you are allowing a customer to pay late, what you are doing is financing their work, okay? And that's not what your company is, right? So you're going to look for patterns. If you have a customer that is constantly paying late, well, then you need to have a conversation with them, or maybe we need to increase their rate, or maybe we need to charge them late charges, or maybe we need to fire them, right? And also, if you're doing subcontracting agreements in government contracting, it might be, 90 days, because if you're a sub and you have to wait till the work is completed, then you send it to the prime has to send that to the agency. Then it's 30 days from when the agency gets that contract to pay, then the prime, and then back to you, right? And that's okay if that is indeed 60 or 90 days. But then you're able to explain it and you're not alarmed, okay? So the story is in summary at this point is told from the right to the left, but then you can expand even the rows while you're here in QuickBooks. And we're going to take a little bit deeper dive here on Brian Cook. So we've done 2 projects for him. We did a 2-story addition and we did a kitchen. My question to myself or my team or the project manager or the salesperson is, we did this 2-story addition. We still haven't been paid on it, but then we came back and we did not 1, not 2, but 3 additional jobs. So why are we continuing to do work for someone who hasn't paid us for work that's already done? So then your bookkeeper or you are chasing this payment that impacts your bottom line, right? That impacts your net income, that impacts your return on your investment. And if you're able to use your bookkeeper to enter in those transactions versus chasing payments, right? And once again, if you're not charging late charges and you're just letting your customers, you know, whenever it's convenient for them to pay you, you are giving them an interest-free loan. All righty. Oh, I went a little too fast here. Okay. So then I've exported the accounts receivable report to Excel, and once again, the bankers are going to do this, the bonding companies are going to do this. I'm looking at the total by the duration. So this is a duration focus, right? So of the total $95,000 that is due to us, 35% of it is current, 10 is in 1 through 30, 16% is through 31 through 60, 15% is 61 to 90, and greater than 90 is 22%. So, and then the pie chart represents that. And so I need to focus, and a banker might ask, or the bonding company, what is the likelihood of you actually getting that money? Or are you going to have to write that off, right? So you can look at it by duration, which, like I said, those people will, as well as customer focused. So very similar to how we did the horizontal analysis. This is a horizontal analysis here as well. Sorry, this is a vertical analysis. Sorry, a vertical analysis. So we took the total amount owed and then divided it by each customer. So right, we did the vertical analysis here for the total accounts receivable divided by the amount each customer owes us. And now we're able to see the percentage makeup of our customers and our customer focus. So there are 1, 2, 3, 4, 5 customers that have the lion's share of our accounts receivable. All righty. And then all of our other customers total the 30%. So, and of those 5, it's what 15, 15, 15, 13, and 12. It's really important for you when you're working on your budget and pausing and being the CEO of your company and looking at your accounts receivable in terms of your customers, because you don't ever want any one customer to be more than 50%, much less 30%, right? And then you've got to be able to articulate the why they're paying late, and then why you're continuing to do business with customers that aren't paying. All righty. So once again, you've got the question. You've got the question. Now you've got to go find the answer, right? So why does this number look like that? What do I like about it? What do I don't like about it? And then if I don't understand it, who's going to help me figure that out? Alrighty, the final section in this chunk is talking about, and it's following right off of the accounts receivable and looking at clients, is client profitability, client profitability and client diversification. In the online QuickBooks version, it's called project profitability. But overall, out of this section, I really want you to think about, and maybe this is something that you write down as an action item. I'm going to do a client analysis and see which clients are or are not profitable. Well, how do I do that, right? Well, you start with your income by customer summary. So that's a report right there in QuickBooks. You click on reports, you click on standard, and you're going to scroll down to sales and customers. And in QuickBooks, when you put that star on it, then that's going to bring those reports to the top, which are your frequently used reports. So back to Craig's Design Landscaping Services. This is income by customer summary. I took it into Excel and I did a vertical analysis on that, the income by expense, and then looked to see which customer and what percentage they were of our total customer base. So this helps you identify if something happens to a customer, and if your largest customer is not paying you on time, then I like to call that the Danger Will Robinson effect, right?
All right, that's me.
Yep, and Susan's going to talk about amazing resources.
And I have a feeling Julie is going to drink a lot of water while she's over there. All right, so there's some, we've gone through some great reports, but there are some resources out there that might help you as you are putting together your plan of what you're going to look at this next quarter. And I know you're all going to be doing analysis of your accounts receivable and your clients, and you're looking at your financials every week. And so what are some other resources out there? So start thinking about the government contract. You're getting all of your financials in order. Well, what kind of contracts does Houston Community College have on their procurement page that I can go after? Because now my financials are all nice and ready and strong. They're on budget. So Julie's going to drop in the HCC procurement page into the chat, so you can start kind of looking and seeing what opportunities are out there. Go ahead and register as a bidder. Look at current bids. Look under bids and evaluation. Look under archive bids. Archive bids are an amazing resource for small businesses that are entering into the government space, because you can go in and look and see what type of information HCC was asking for people that were bidding. You can also go in and see who won that bid. So if there are bids that fit your industry, nice to know who won them. It's also nice to get an idea of what information I'm going to be asked when I go in and submit a bid. So HCC uses Bonfire, which is an extremely easy tool to get registered in and to go in and look at all of the information. And Bonfire is a single login. So basically, once you create a Bonfire account on HCC, and then you go, say, to Fort Bend and you create your Bonfire account at Fort Bend, you are going to use the same username and password. If you don't, it's going to change it at HCC. And if you use it for another school district, it'll change it there. Harris County uses Bonfire. So know your Bonfire username and login, because that's going to open the door to all of these different procurement sites. You'll have to go in and register on them, but it is the key that opens the door. All of HCC procurement are listed right there. It's going to tell you when it is due. When you see it in orange at the top, that means it's almost due. And then it's any additional, procurement. It's going to tell you how long it is before it's due. So kind of go through there. You don't see one that matches you? That's okay. Open up one. Look at it. See what they're asking for. Start putting your plan together. So it's a little like budgeting, right? You're going to start putting a plan together. Like HCC is someone that I want to work with in the next 12 months, and I'm going to get ready. We talked about the archived bids. I use this all the time when I'm doing research. So a client comes to me and they say, I need to know who purchases my services. There are several different websites that I will go and look and see what they purchased, when they purchased it. And this is the place I go on HCC. I'm going to go in and I'm going to look and under all of these bids and see if there is a landscaping. I find one, when was it awarded, and how long was that contract for, and who won it. And that way my landscaping client can determine if this is one that they're going to want to go after. We can watch for it because we know the bid is going to come out in 3 years because that's what the contract says. And we also know who the competitor is going to be. So we have an idea of what makes us different than that competitor. So here's one that was awarded. We see when it was the due date, sort of the dollar amount, who won it, and then any additional documents that were on that bid. So HCC is transparent. They want you to be prepared. Here's a very nice picture of the procurement team. It's got contact information. You can scroll down there and find out all different information. Julie is going to be dropping the link for that into the chat. So you know the people involved in the procurement. All right, so HCC Community College Resources, there is an introduction to accounting class. There is also a QuickBooks class. So like, oh, Susan and Julie gave us a lot of information, but we didn't go through step by step. We didn't walk you through how to set everything up. You're going to change from your current system to QuickBooks, or you want to get to better use your current QuickBooks. Well, take a QuickBooks class. And that way you have a better understanding of how to set it up to get more value out of it. And if you are a small business and you have not gone through the Goldman Sachs 10,000 Small Business Program, it is one that Julie and I both highly recommend. It has been a game changer for many of the small businesses that I have worked with since 2011 when it came to Houston. Julie is actually a graduate of the 10,000 Small Business Program from Cohort 1 in 2011. So, and she still uses information that she gained at that, as well as the network that you're going to get. So these are different resources for you to kind of propel your company to the next level. So go to QuickBooks. Look at their blog. Look at the information they're providing. Again, it might answer some additional questions that you have. It might think you have questions you didn't even know you had. So go through that, look through it, follow it, make sure that you are thinking about your financials a little differently. And so QuickBooks is going to be able to help you if you use QuickBooks. Julie's dropping that link into the chat. Here's some additional resources on QuickBooks, small business data, different ways that other businesses in your industry may be running their business, or some data about those small businesses. 7 survival tips for small businesses. I mean, right now we all need as many survival tips as we can get. So here's some different, so you go to the QuickBooks blog and you're trying to figure out, right, I'm working on my budget. I need to know how to figure out my employee cost. Here's a paycheck calculator. Here's an equity and investment calculator. That employee cost calculator. That's going to make sure that I capture all of the expenses that each employee has. So when I'm doing my budget, make sure that I am putting in correct information. And Julie dropped that in. All right. So what are some action items that you have that you're going to be working on over the next quarter, the next year, we kind of want to hear from you. Y'all been really kind of quiet. So if you want to talk to us and tell us what you're going to be doing, raise your hand. Julie's going to come back over here and listen because, well, I need help hearing. And I'm going to go over there and unmute you.
We want to make sure that y'all walk away, like we said, with a couple of action items from today. And most importantly, we saw in the questions, you know, somebody said that this was the first time that you've taken like a really deep dive into your numbers. And so what are the stories behind the numbers? So we hope that you got that takeaway. And then each business is a little different. And so what are the reports that are critical to your business's success? And then make sure to look at your reports frequently, right? And everybody's schedule, you know, will be different. But we want to encourage you to look at least weekly at your profit and loss, your accounts receivable, your accounts payable. Maybe if you have inventory, right? Because inventory is cash, right? Because it costs you money to have that sitting there. Inventory doesn't do your business any good if it's sitting in the warehouse, right? So you need to, if you are an inventory heavy business, you need to look at your inventory moves. And then either look at your job or project profitability weekly or as soon as those jobs or projects close out. Maybe that's monthly, maybe that's every Wednesday or whenever they close out. But once again, we want to give you ideas and tools that work for your business, right? Maybe you're going to take 2 or 3 of these things away. Maybe you're going to take all of them away. Your monthly reports, and I know we've said this quite a bit, but it really goes back to that one slide that Susan shared about your business success. If you look at your reports annually, monthly, and quarterly, right? And even, you know, I would say that looking at your numbers and stuff on your phone and on your dashboards counts, right? That counts as daily. At least you are going eyes wide open with what's going on with your business. Every month, you're looking at your profit and loss, your balance sheet, and your statement of cash flow. And you're looking at your budget versus actual, and then budget towards the end of the year, right? We're halfway through the year, so we're looking at our budget versus actual to June, and then budget versus actual year to date. What changes, modifications, and tweaks do we need to be making for the next 6 months to hit that yearly budget? Is it achievable, right? Your accounts receivable, your accounts payable, we're looking at those every month as well. And then your reconciliation reports. Make sure that you are reconciling your accounts. Are you reconciling your bank account and your credit cards and your line of credits, all of those, because just getting those transactions in isn't the full story. We've got to make sure that they're reconciled. And then once again, you know, looking at monthly, your job profitability or your project profitability. Or if you're doing that weekly, then maybe let's start looking at our client profitability every month or every quarter. All righty. And then I've said this a couple different times, but I really want to make sure to show this slide on your monthly list as you're going through. And this is a muscle, right? And so the first time might be a little bit more painful than the second, but you'll get into your cadence. You'll find your rhythm. You'll find your confidence. Make your list. What don't I understand or what doesn't make sense, right? Because this becomes your education in your financials and your oversight of your business. Who can help you with that? Is that a score mentor? Is that someone with the SBA? Is that your bookkeeper? And then your other list is things that you understand, but maybe I don't like them, right? Or I don't like the way that it's going or the trends, or I need to get some more information, right? So that becomes the basis of your changes for your 12 to 24 month cash flow. So you're already thinking about where I am year to budget. What am I going to do for the rest of the year? And what am I going to do about it, right? And so we encourage you to look at those. I already saw in the chat, someone said one of their immediate action items was going to go back and listen to part 1. So great. And give us a little bit of time to get part 2 up there. We will send you an email with a direct link to the video. And then we also want you to make sure to complete the survey. Susan is going to drop the link for that chat. Excuse me. Susan is going to drop the link for the first part of the video into the chat, right? But we're doing lots of webinars, and we know that there are lots of programs out there and lots of other webinars out there. We want to help educate you. We love seeing familiar faces and familiar names on our seminars. More education obviously equates to more wins. So in July, we're going to have a 1-hour session about how to respond faster, better, and win more contracts. Then in August, we're doing a contracting 101. And maybe you've been in this space for a while. You can always pick up, like I said, 1 or 2 things. And these are from 12 to 1 each month. And then get your business in order. This is in person with partnership with HISD. So Yesenia and her team at HISD, and this is an in-person workshop on August the 30th in late afternoon at HISD. Then in September, we've got another one about 10 different ways to grow your business through government contracts, and that's another webinar. If you've missed any of our previous webinars, they're located on our portal as well as on our YouTube channel. So we want to encourage you to become a member of the portal. On the portal are all sorts of other events. With City of Houston, other events that Veronica's having with Houston Community College, Metro. If you're interested in getting your HMSDC certification, go there. If you want to sign up for Port Houston's Opportunity U, all of these different events and programs that benefit entrepreneurs, small businesses, women-owned businesses, and minority-owned businesses in Houston, we have taken the time to put them on our portal under the events. And so if you're, like Susan said, go and grab an awarded RFP, open it up. If you don't understand some of those words that are on there, go to the portal, look them up in the glossary, go through our frequently asked questions, because the question you have, someone else probably has had. And we're going to, after all of our seminars, that's why we ask you to put the questions in the Q&A. After our seminars, we're going to go into the portal occasionally, and then update those Q&As based off of the questions and answers that were asked in our seminars, because those are timely questions, and we want to make sure to be able to answer your questions and have a one-stop shop for you to go and search for anything and everything in government contracting. We really appreciate you being here today. We hope that you take a few extra minutes in your schedule to fill out this post-event survey. We take this very seriously, and so does Veronica and the team at Houston Community College. Once again, feedback is important so they can customize their programming if there are specific needs or challenges that you're having in the procurement space, or questions that you have for Houston Community College. We'd like for you to put those in the survey so we can make sure to respond to those. We've got some extra time, and we'd love for you to ask us some additional questions, or if you'd like to share 1 or 2 action items that you've got from today's session that